primary responsibility is common to all financial managers. Wherever you go, you will have these three things. They will look after investment decisions. You know that because we've talked about a branch of finance is investment. Financing decisions, because a branch of finance is financing. Financial planning and analysis, yes, can cover a little bit of accounting in it, but they need to look after the financial planning and analysis, right? But financial planning is very good because of the fact that you have to look at the future. That's where we talk about forecasting and budgeting. What is the difference between forecasting and budgeting? You know it very clearly. Forecasting is concerned with the expectations of the current financial year. The current financial year. Budgeting is concerned with the next year. After this year. Is that clear? Do you see how simple these things are? These are concepts. Very easy. Any questions on this? So for forecasting, you will be relying on historical data, right? So you are 3 months within the year. So at the end of March, you can look back at how the company performed from January to March. You use that to forecast for the next 3 months. After 6 months, you have enough data, enough historical data that you can look at. This is how I performed in the first semester. Let me forecast for the next semester. Is that clear? So that's how forecasting work, right? It could come in your exam. It could come in your exam. All right. Other responsibility, cash management. They need to look after the cash management. What comes in, what goes out. Relationship management. They have to ensure a good relationship with all the stakeholders. Dividend decisions. What is the dividend? The dividend is a portion of the profit that is given to the stakeholders or to the investors. Stakeholders have a stake, have a share in the company. Is that clear? Guys, is that clear? Perfect. Perfect. Any questions on this? If no questions, we're moving on to another responsibility of theirs is coordination and control. This is quite definitely normal. They need to be able to monitor and review the activities and the financial performance of the organization. So they're looking at the objectives and they're looking, are we on route, on par with the objectives? Right? And if we are not, we need to take corrective actions. So that's what it's all about. Okay? So they need to be able, the financial manager will be doing, you and I will do that. We will have to do that where we are comparing what was budgeted, what was forecasted, and the actual performance. We will do that. So you will be sometimes provided for your exam. You're going to be provided with a financial statement for this year and a budgeted financial statement. And you are able to compare between the two. You'll be also able to compare last year's with this year's result. We do that. Okay? It's all part of coordination and control. Investment decisions, you know about it. But what is it really in essence all about? It's about what are we going to invest in the short, medium, and long term. Long-term investment, for example, you understand that these will be projects, big projects for your company. You know when your company is implementing some project, right? How are we going to do? How are we going to assess which project is the best? We make use of something called capital budgeting tools. And one of them is, for example, the net present value or the discounted cash flow. But you say, what are you talking about? All these words that are coming out of your mouth. So obviously, long-term budgets are not, you are investing in long-term assets. For example, buying new machineries for your company. Okay? These are long-term assets. They are not the same like your inventory. Okay? Or your trade receivable, trade payable. Guys, anyone of you did a bit of accounting? Do you understand this? Your inventory, for example, it's the things that you have to buy in order to sell and then you make a profit. Ah, I like that. I like that. All of you understand that. Guys, I tell you, this is going to be the best module for you to understand accounting way deeper than you ever understood it. This is the kind of module, right? So, but we now need to link accounting and everything together. And that's the purpose of this module. Otherwise, you're going to just be, you know stuff about accounting, but you don't know really how to apply it. Where does it fit? Because it is incomplete. Finance will give you a broad view of everything, okay, when it comes to that. So the net present value, for some of you who have touched on the net present value, what do? We just use the time value of money. So we have future cash flows that we are going to discount. We're going to use the interest rate to bring them at the present value. Okay? And that is the notion of time value for money. You know that. So, but it's really, it's such a good thing for capital budgeting because we're able to look at future cash flow that we've projected for the future. We can put them in today's terms. And then that can help us compare different projects. You see, it doesn't matter if this project will run after 5 years, it will run for 5 years, sorry. This one will run for 10 years. It doesn't matter. We can put them all today and compare them and select the best, obviously. That's the beauty of finance, right? But in the short term, obviously, the kind of decisions that you're going to make is just, you're going to make capital management policies decisions. What is capital management? What is working capital? Working capital is everything short term. If you hear working capital, it is short term. It is the actual business that we're doing, like selling product. We have an inventory and we are selling those products. It is short term. Current assets, current liability. You know that. Obviously, we just want to make sure that our current assets are always greater than our current liability. That's a good policy, isn't it? That's a good, very, very good policy. Any questions before we move on to financing decisions? What is it about financing decisions? What are we talking about? We are talking about two ways that we can finance our business. One of them could be to go to the bank and to borrow money, or to go to financial institutions, creditors, and borrow money, right? But be careful here. These financing decisions are not to finance short-term assets. They are there to finance long-term assets, right? These are the capital that will make us run the business. And that's why we talk about one term that you've read, capital structure. So you're going to acquire capital, but what is your capital will be made of? Is it going to be made of 2/3 of debt, 1/3 of equity? Very important. What does it mean, equity financing? Equity financing means that we sell shares of the company to investors. In other words, we're inviting them to be part of the business. So they have a right to the profit of the business. And what do we give them as reward? Guys, can you write? What do we give them as rewards for those investors? Oh, you guys are on fire. Lara, I like that. That's right. That's right. Well done, Shreya. Okay, so guys, so we give them dividends, right? Cash management. We need to look at what we need for our working capital, cash management. But you say, what is that though? Working capital. Remember again, I told you working capital, that has to do with your current asset, current liability. It's short term. It's what we do on a daily basis. That's our working capital. We working the capital. The capital helped us to buy a building, to buy machineries to produce, right? But what do we do on the daily basis? What is our core business? We are working out that capital. Do you see? So, but we need to, the cash management is, for example, we have debtors, we have creditors, we buying raw materials on credit, and then we sell them on credit. We have debtors. We need to make sure we're managing that correctly. Because if we are taking on credit, but we don't have enough cash in return to pay back our creditors, that's a problem. That's a problem. If we are not able to pay our debtors or debt, let's say we borrowed money from the bank, we need to service that debt. We need to pay back the money every month with an interest. You know all about that, right? Does it ring a bell? Isn't it your everyday life that you're living? If you took a bond, aren't you paying the money? Aren't you paying back the money every single month? Isn't that your real life? This is a real life situation. That's the same for a big business. A big business can take a bond to finance long-term asset. Isn't that interesting? And so every month they need to pay back their debts. Does it make sense, guys? Perfect. And you read this. The financial manager needs to be a negotiator. If you're gonna be in the function also of a financial manager, and you're gonna be assuming financial management functions, you're gonna also need to liaise with financial institutions, banks, brokers. Especially you as an entrepreneur, you need to raise the funds for your business. But you need to raise those funds in the most favorable terms, right? So very, very important. Okay, guys, we've covered all of this. Relation management with the market, very important, okay? So you need to, the financial manager needs to work on very good relationship with shareholders. And shareholders are interested in getting a return on their investment. So now you have something called ROI. What does that mean? You will know all about these kind of terms, return on investment. You see, so your shareholders will be more interested in that. Your creditors will look at your financial statements to see, to determine if it is desirable to sell to you on credit, because they need to be able to see if you're paying your debt on time. Your employees are also another stakeholders. They want to be able to look at the financial report and see that their jobs are assured, are secured, right? Government needs to have its cut with the taxes, isn't it? Your customers, the customers of your business also have an interest in your business. You know, that's why you have very good relationship with your suppliers, Jesse, right? You have suppliers. Blessing, you have your suppliers and you work together and you look after that relationship. Because if you don't look after that relationship, that's a problem. The community, you know, we have a vested interest. If they're going to be a new company, we want to see if it's going to create new jobs. We want to make sure that it does not, harm the environment and all those kind of things. Very important, right? So this is the reality, isn't it, guys? This is real talk. So, guys, when you see a question like this, now I'm starting to give you now tips. This kind of question would come in your test, just the way it is. By the way, question 1.2 was in the exam of semester 1. For each of the following stakeholders, briefly describe their objectives and what a financial manager needs to be mindful of when considering their influence on the business. This was an exam question. What you do is, if you get a question like this, don't waste time. Write the answer to this question in your notes. You're going to revise your notes close to your test or your exam. That will save you plenty of time. Do we understand each other? So these questions, some of these questions will be back in your test, your exam. So I tell you, does that make sense? That's right. So I hope you understand very well. Explain what an entrepreneur is and how their role differ from that of a financial manager. This question was in the test. It might still come back in your test that you're going to write in 2 weeks' time. So don't waste time. That's what I'm saying. Studying these chapters and reading for yourself should not be taken lightly. It should be taken very seriously, because as you're studying and you are answering this and you're putting your notes clear, it's going to save you plenty of time when, for example, the test comes. Because someone who has already written the answer properly to this question, as even reference to the answer, because remember, guys, if you're dealing with theory, please always reference properly, right? So you reference and you complete the question, and your question, your answer is ready. You're just going to copy and paste that answer when your test comes. It saves you plenty of time. That's why, it's going to be a pleasure for you to pass these exams. So these are not a waste of time. They are part of the objectives for this learning unit. I hope all of you understand this, okay? Dividend decisions, what are we talking about? Should we pay out dividend, or should we reinvest that money into another project? Very important kind of decision, right? But the profit minus the dividend that we're going to pay out is what we call the retained earning. And the retained earning goes into a pool of all the retained earnings that we're getting every year. But that's money that the company is saving for other projects in order to expand, right? So I hope you understand this very clearly. Right. So Blessing, you have a question. Go ahead.
Thank you. Sorry to take you back. I just heard you talking about referencing. I'm not sure, maybe if I got it wrong. Were you referring to when we answer questions in our tests? or did I just misunderstand what you?
So the thing is this: you can answer this question, right? You understand it, you can answer it, right? But you remember you are doing an examination. You are a student. You have an academic responsibility of referencing. Referencing is not a bad thing. Referencing is what gives you the marks. Because what you are saying is that you didn't invent what you are writing down. You took it from somewhere. In this case, if you use your textbook, guess what? You reference your textbook. If you used other sources, guess what? You simply acknowledge those sources. That's all. But what that means, it says, I have consulted, I've worked hard to do proper research to answer this question. That's what gives you maximum marks. So for all of you out there who hate referencing, but guys, you have the referencing guide. And like I said, this is not a theory. It's not going to be, you're going to have just few questions that will be theory, right? Probably your first test, you will have more theory questions, but that's all. From second test, it's going to be always majority is going to be calculations, numbers, right? So from time to time, you need to write theory, but you just need to understand if it is a test, a take-home test, for example, you will have 24 hours. You need to reference what you're doing, but you can save time by answering these questions and already referencing them so that when it's time for the exam, you just can copy and paste, make sure that you correct your errors, grammatical errors, and all that, right? But it makes your life so easy, isn't it? Is that clear, guys?
Yes, thank you.
Yeah. Because what I wouldn't want is you not referencing. So basically, you are saying you never took it from anywhere. You are just the author of that. Obviously, it's not true. You can't be the author of that. If it is your textbook, reference your textbook. If you're using Investopedia, reference it with Investopedia. We don't accept Wikipedia, but we accept Investopedia. So guys, write that down, Investopedia. That's the best financial dictionary that you have out there, Investopedia. It is the best financial dictionary out there. Very good. So have some sources that you go to, to consult. It's very good. It gives you marks, more marks. All right. So risk management, guys. Can I go a little bit deeper? All right. He needs to look after the risk management. Obviously, business risks. You have internal, you have external business risks. You read that, okay? In essence, the business risks affect the bottom line or profitability of the business, okay? It's inhibiting it from achieving the objectives of the business, right? You have different kind of business, right? You have the main ones will be your operational risks. Those are often when you don't have the required processes in place. You have your strategic risk, obviously, which is not meeting the objectives of the business itself. Because you have a strategy for the business, you have objectives for the business, but if you're not meeting that, that's called a strategic risk. And you have the financial risk, right? What is it? It's the moolah, the money. The possibility of losing money is the financial risk, okay? You get all that, okay? But obviously, risk is something sometimes you can't do without, right? Financial management must look at the optimal risk tolerance of the business and invest in assets where the returns are higher than the risk. The return should be higher than the risk. And there is a principle in finance. The higher the risk, the higher the return. The lower the risk, the lower the return. And it makes sense. You're not going to invest in diamonds, which is so risky. You have to spend a lot of money, right? For no return. No, you invest because you know that the potential of return is also very great. Does that make sense? Ethical considerations, guys, it's not to be neglected. Very important. It was in your test. This one was in your test because they ask you what is really ethics. There was that question, what is ethics? So ethics in finance is made up of moral norms that must be applied in financial activities, right? For example, fairness is an ethical norm. Honesty is, is an ethical norm. So most financial managers are required to comply with the ethical code of a professional body. Okay? It is the code that guides the decisions they make in an organization. In South Africa, obviously, what we have? The Institute of Professional Financial Managers, IPFM, all right? But it's not the only one. There are others. So ethical standards and code of conduct motivate businesses and market participants to adhere to laws and regulations impacting business and professional practice. So maintaining and encouraging high ethical standard does lend itself to a stronger reputation for the business and its financial management. Isn't it? So it's good. It's good for a good reputation for the business. You must follow, definitely. Very important. Why am I saying very important? Because it will come in your test. It could come in your test. Just make sure you understand, you read this part. What else can I do? Can I say here? I think that this is clear. Please don't forget to read this section. Very important. And especially it is important here on this section um, when undertaking business decisions, a financial manager should consider what impact their decisions will have on stakeholder rights. Very important that they will not be violated in any way. How stakeholders' rights will be remedied if they are violated. Mutual stakeholder wealth maximization, i.e., no single stakeholder will benefit from a decision at the expense of another stakeholder. This is just common sense things, right? And read example 1.2, very important. It's a good read, but it does highlight some of this. I'm going to finish with the agency relationship and problem. All right. Guys, any questions? Okay, you guys are good. I'm really happy. So guys, what you can do already, you're gonna go through the test that I have uploaded for you in your test prep one. Yes, it was in the ICE tasks. Yes. So, but in your also in your exam test one prep, please start touching on the questions in your test, in your past test, that are related to learning unit one, and check the answers and start preparing already for your test. Is that clear, guys? So start already with that. But the agency relationship, what is it? It's describe a relationship between the management and the stakeholders. Just it's written there, whereby the stakeholders have delegated the authority to manage the business to managers. So yes, in theory, the financial manager has been appointed by the owners and has been given the authority to make decisions that will ensure the growth of the business and the maximization of shareholder value. But that's not the same in practice. Okay? That's where the agency problem arises, right? Because there's always a risk that the financial manager might not act in the best interest of the shareholders. So when the objectives of the financial manager conflict or do not align with that of the business, there is agency problem. Who is the agent? Who is the agent? The financial manager, right? That's your agent. He's acting on behalf of who? He's an agent for who? For the shareholders. Is that clear, guys? I just wanted to make that clear there. And it's quite true, depending on the kind of companies that you are dealing with, but very large corporations, right? There is no visibility of internal financial information. So basically, they have to rely on reports, on published reports, or the press to judge, to see if the company is being properly managed. That's what we call asymmetric information. And that is not the agency problem, but it makes worse the agency problem. Just be careful there in your reading. I trust that that is clear. That's really theory part. So it makes it worse because the shareholders does not have access to all the information, right? And he has sometimes to rely on published reports and even the press. So he cannot, the shareholders cannot always be certain of the that the financial manager is acting in their best interest, right? So financial managers could be conflicted by their own personal objectives, yes, such as improving personal wealth, job security, and employment incentives. That you can read, it's quite clear. But what always comes in your test is this one: performance-related reward scheme. Obviously, they are being used to incentivize the financial manager to act for the purpose of, for the benefit of the shareholders, for the profit maximization, right? So it's something that is used, but what you need to understand is that there are advantages to it and there are disadvantages to it, and they are here. They tell you straight away they are here. So please study this, understand this, because in the exam you won't have access to your notes. And in the test, we're not sometimes going to ask you just a straight question like this and say, can you list 4? Obviously, if they tell you, can you list 4? Guys, just don't copy and paste. Put it in your own words, because remember, you are now a student at an academic institution. You are writing. This is not whatever kind of writings. You are doing academic writing. So don't just take exactly what is in your textbook. Paraphrase. Put it in your own terms. You can save yourself time, but when you are studying, do that already. Put it in your own terms already when you are studying. So say it in your own words, but reference the textbook, because you drew your inspiration from your textbook. Is that clear, guys? By the way, I was the the plagiarism officer 4 years ago for VC. So I'm the worst one, if you're not referencing with me, really you're choosing the wrong guy. So does that make sense, guys? Referencing is so important, and trust me, it's very good. Is everything clear, guys? Okay, so just put it in your own terms. Paraphrase, but everything is clear here, right? For example, can we touch on the disadvantages of a performance-related reward scheme? Its unrewarded tasks may be neglected by the employees. And that is true, logical, right? Because if you are not rewarding some tasks, some people will neglect them. Low rewarded employees may become demotivated. There could be an unhealthy competition that arises among employees. And performance-related reward schemes can be costly for the company to maintain. All of these are just logical. So what was this all about? What do we want you to properly understand? The purpose of these learning units, right? The financial manager is responsible for the financial planning, analyzing, investing, and financial decisions of the business. The financial manager's key objective is to maximize shareholder wealth. These are definitely clear. The key difference between profit maximization, remember again, and I will tell you this, the next chapter that you need to study, take the learning unit summary and start from there. That's a very good tip. Start always from the main objectives. This is the summary. These two things are very important. Your first, thus the breakdown of what you're going to be, what the chapter is all about. But the summary provides you actually a very good starting point, I can tell you. It provides you because you can have already the highlight of the chapter, and then you can go deeper. So you can use it, guys, as another way to study, right? And we did touch on the ethical standards and codes of conduct that are key to ensuring that the business is run in a professional and effective manner. Then we finalize with the agency problem and the threat it can cause to the shareholder wealth, right? So what we're going to do is we're going to go deeper on these things in the next chapters. Financial planning and analysis. How to interpret financial results using analysis tools such as ratio analysis. Chapter 2, we are starting with ratio analysis. Very important. As well as preparing the budget, right? Okay. Investing decision making, that will be in other chapters, and financing decisions. Guys, so that's it. Any questions? Not from you, Jesse. Thank you. So anyone else? All clear? Guys, can you just check for me if you have access to test one prep? OneNote, in your OneNote, can you just check if you have access? Because I just uploaded before the session, I uploaded past papers, past tests with all the solutions. Can you just check? And can you just give me the thumb up? Wonderful. Thank you, Marty. Marty has access. Anyone else? Wonderful. Wonderful. Yes, I have access to it. So learning unit 2, I've realized that it was too big. I've been adding so many notes that it was difficult to share learning unit 2, which is unheard of. It means that there's so much notes that OneNote did not allow me to share it. But what I'm going to do, I'm going to divide learning unit 2 into 2 parts. So from tomorrow, I'm going to give you access to the 2 parts of learning unit 2. I'm going to send you the pre-recordings to learning unit 2. Guys, don't waste any time. Whatever you are doing, do it in preparation for your test. So everything that you are doing right now, you need to be intentional as if you are preparing already for the test. That will provide you ample time to prepare you before the actual test. So that's a very good strategy that you should keep from now on, is that every learning unit, you are not wasting time when you are reading it. You are reading it and you are already preparing your answers to actual tests that you're going to write. Does that make sense? And plus, you can check to see exactly what is in the test, the kind of questions that is being asked in the test. That will allow you to prepare. Are we good? Perfect, perfect. So I will have to call it the night. Thank you so much for participating. Guys, if we can keep this kind of attendance for the rest of the semester, it's going to be very, very good. And it's going to be for your benefit. But obviously, I do understand it's the first session. Some of you maybe did not prepare questions, but please, for the very next collab session, please prepare questions. When you're practicing, please prepare all the questions so that we can make our collab session more collaborative and not a one-man show, right? So I would accept this just because it was the first collab, but from next collab, I want to hear more from you. All right? Perfect, perfect. Thank you so much. So again, thank you so much, Shreya. Thank you, Lara, Marty, Jesse, Jermery, keep well. Blessing.